What's up, everyone? It's Ray J back with another video. And in this one, I want to talk about Tesla stock and break down whether or not I think the bottom is in and what I think is going to play out for the share price moving forward. But let me just mention that I am not a financial planner. Take nothing I say as financial advice. And also, if you guys can, please smash the like button. It not only benefits me, it benefits the entire Tesla community as a whole. Looking at Tesla, we could see that Tesla has this nice downtrend that's been established for quite some time. If you look at the way Tesla's moving, we've been continuing to fall within this range for quite a while now. It's been actually many, many weeks since July. Tesla's been on this big downtrend. Now, right now, there's no sign that Tesla is basically out of this downtrend. We're just continuing to kind of tip like this. I think there's a good chance that this may continue to maintain its structure. Now, if you get a little temporary rally in the markets, I'll be watching to see how Tesla reacts to this. But let me just note that as of right now, there's no sign that Tesla is officially breaking out or officially getting a big, massive bounce. Now, I think we are temporarily getting a small bounce for the markets in Tesla, but there's no guarantee the move is done with considering what's coming out. So next week, we have CPI coming out for Wednesday. If the data is not too good, it's possible the market gets a rug pull despite this temporary rally. And then on top of that, I just want to mention that there's a lot of news involving Iran. If Iran and Israel get into a conflict, if there's a big attack, things could always change for the markets. So you want to be very, very careful amidst all of this. This is all very, very big news. But on top of this, I just want to mention that for other things out there, we have earnings. Most of earnings are kind of like out right now, and the market's dipped amongst earnings coming out. Earnings were kind of mixed. We had some good, some bad, all over the place. But what's happening is everyone was starting to short the markets really hard. The put and call option 5-day average ended up going up for the markets. So that's why the market's starting to rebound a little bit. But I think that this could be setting us up for one leg lower. Now, will it be the whole situation involving Iran to be the catalyst? Will it be CPI? Will it be the Fed? I don't truly know. But I want to break down exactly why it's possible that we're not necessarily done quite yet. So I'm going to start off with SPY because when you look at Tesla and SPY, we have a price comparison between them. Yes, there were periods where Tesla was greatly underperforming this year compared to SPY, but ever since the month of, let me just go back here, ever since like around that almost May period of the year, Tesla's been moving very similar to that of SPY. They pushed up together here after bottoming. They started this little rally together, kind of consolidating, and then they pushed together and then they started dumping almost at the same time. So you could see how they tend to move very, very similarly. The QQQ has been moving very identical to that of SPY, and you can see how this is also moving just like that of Tesla. Notice how that Tesla was underperforming for quite some time, but ever since we got to the middle and maybe early phases of this year, the QQQ and Tesla kind of dipped together on this trend. They came up a little bit, consolidated. This is when Tesla was trading sideways, whereas the QQQ started pushing, and then Tesla played a game of catch up. It caught up, and then starting in July, they both came down together. So I presume they're going to run together as well. So I'm trying to say that the market moves on an algorithm, and the algorithm is affecting Tesla, QQQ, and SPY, which is why they move very similarly. So, what does this mean for the future? Well, it's very simple. What we see for SPY may also affect Tesla and the QQQ, and I presume we're not necessarily done with the downside move. So, why do I say that? There's many different reasons. I mean, one thing worth noting is that on the daily for SPY, we still have this gap to fill all the way down here. We haven't filled this gap down here around the 504 area. Plus, we haven't touched our 200 EMA quite yet. And generally, during the corrective phases, we do like to touch our 200 EMA. This does happen the majority of the time during significant moves. So, from what I'm seeing, we still have this area of interest on SPY, which would take us all the way down towards this gap fill. Okay, around this 504 zone, the very, very low 500s. That's going to likely come down for this gap. And then we might see a rejection considering that the Elliot wave sequence is not necessarily done. If you look at it like this, you will see that for SPY, looking at this Elliot wave count, you will notice that we got this very, very massive wave one. Give me 1 second, guys. Sorry about that. Right here, we had wave one, and wave one basically was this sell off right here, in my opinion. Wave two is when we got this nice retracement. Wave three was the major sell off. We got to about 507, and we're approaching wave four, which tends to be followed by one last wave down. Now, when SPY bounced, okay, off wave 3, we bounced off our 0.786 retracement area. And that's significant because when we bounce off the 0.786, that tends to kind of like signify that this is actually a major sell off. And it's not necessarily that the bottom is in. This was just a defensive bounce that we made. So the 5 wave count is not complete. We're attempting to rebound a bit, but notice how we also did something very similar back here. So SPY has a tendency of liking to essentially form these double bottoms for an attempt to recover, only to reject. So like right here, we had a double bottom, and then we attempted to recover, and then we rejected, right? And then we could be looking for something very similar right here, as we have a double bottom that formed. We may make an attempt to recover, and then we could just get a big rejection. So I just wanted to call that out. So from this phase, when you look at SPY, notice how when you take a Fibonacci retracement and you look right here, notice how our 0.618 retracement is just under 537. That's very close to where the start of the gap is. And then the 0.786 retracement is very close to about 544. That's also our key resistance. So I think 537 to 544 is going to be a key area. That's very close to our golden pocket. And I think that around here is where we might be looking for some major resistance and a high probability of SPY rejecting. So right now, SPY is on an uptrend. We're trying to push right now. Look at how we have this rising wedge. So it's just like this. You could draw this very differently, but one way you could do is just kind of look at this like this, or we can actually draw it like this. I'm going to look at different ways. It doesn't really matter. There's basically a rising wedge like structure. And then if you take another trend line like this also kind of resembles a rising wedge. So we have this rising wedge like structure on SPY. This generally leads to more downside eventually. But I think for now we're pushing and we're going to be approaching these key areas. If SPY could break 535, we're going to be looking for this gap fill towards 540. We might push a little higher to approach that. And I will talk about Tesla in just a few minutes, by the way. I just have to talk about this very carefully. But what's going to likely happen is something like this, where we continue to push and push and push. But if we get a break of this wedge, that could be confirmation that something's going to happen. I don't know if it's CPI. I don't know if it's going to be something involving the Middle East. And there could be one more wave down. There could be one more move to the downside to fill some of these gaps that formed. Notice that SPY also happens to have a some gaps to fill below. We kind of like gapped up and we haven't filled every single gap. And then I think the 4 hour is going to give you guys a better amount of insight. We still have those gaps that are unfilled, basically. So that's what I'm trying to say. So it makes me suspect that we're going to attempt to push higher just for now. But as of right now, the odds favor this is going to be a temporary rally, and we're going to be looking for a rejection to establish a lower high. And then we're going to be looking for a move back down. Okay, that's what SPY is kind of suggesting. QQQ is giving us the same signals because we lost our 0.786 retracement hitting critical support, but now we're trying to rebound. The technicals are very similar to that of the QQQ because the trend is still bearish as we're continuing to dip, making basically these lower was let me delete this real quick. Sorry about that, guys. Making these lower highs and lower lows. So if we dip like this, we're just continuing to fall. We made this low here, lower high, lower low, lower high, lower low, as you guys can see. But one thing worth noting is that we haven't broken the high yet. We haven't broken 480 to really turn back up. We might reject short of that, and we might be looking for a move to form our final low. That's always going to be a strong possibility, at least based off how this chart looks. Why is that? Because when you look at this, our key Fibonacci retracement area, you will find that 464 to 455, that's actually in between where this gap happens to be, is going to be a key level, and that's where we're going to have some major resistance. So I think what's going to happen is QQQ is going to hit 455, maybe go a little higher. It might even get closer to the 460s. They're going to make everyone turn bullish because everyone turned bearish. Everyone started buying puts. The market makers are squeezing shorts again temporarily. They want us all to think the market's going to rally, all-time highs are coming, everyone starts buying, and then they're going to give us that rug pull. So I think that's the most likely possibility as of right now. If we break key resistance levels like 480, my view could change, but I'm not really seeing that thus far. And that's very, very significant. So what does this have to do with Tesla? Why am I talking about the market potentially pushing a bit and possibly rejecting? Well, Tesla has this range. Notice how we like to go back and forth between supply and demand. And there's a good chance we're about to see a little attempts to push up off this inverse head and shoulders to about 208. Could we go a little higher? It's possible, but if we get that rejection, there could be one more final low coming. Either Tesla will make a lower high, a higher low, and then try to break out of this, and that's when we're going to start our recovery move. Or what's about to happen is we make one more final bottom for Tesla, all the way down to where this low happens to be, maybe just under 180 before we make our big recovery attempt. It's got to be one of those two, most likely, in my personal opinion. That's what I think is going to happen to Tesla. Now, notice something else that's very significant. Okay. Tesla is forming a giant inverse head and shoulders. Let me show you. This suggests there's going to be a big bounce coming soon, but not yet. We're not ready yet. Look at what the formation on Tesla. It's very symmetrical. Okay. Just because we don't have the same lows, it doesn't mean it has to be exact. It doesn't have to be exact, guys, but it's very close. So we have this very, very interesting looking inverse head and shoulders like structure that has been developing. Notice how we had this high all the way up here, right? This was taking us all the way up to about 280 to 300. This was like our major symmetrical phase. And we're going to be watching to see if that move ends up forming again. But notice how our first move would have been like this left shoulder like structure that was like right here. You can maybe argue the left shoulder is like around here, right? And then this is our head. And then this is kind of like our right shoulder. That's one way you could interpret this. This is like an inverse head and shoulders, right? But another way you could interpret this is the whole thing is just a giant symmetrical structure. And we have an inverse head and shoulders within an inverse head and shoulders. So let me elaborate. What if, what if we're about to do something like this, right? Basically, imagine if instead of us just having a small inverse head and shoulders here for the recovery, this is actually a giant inverse head and shoulders. So this green line is our left shoulder. This blue line is forming our head, and then this is our right shoulder that we're forming right now for another rally as we approach the end of the year. Especially after the election, maybe it could be the robotaxi event sometime in October to November, the rally starts. Could be even sooner. So we'll just have to wait and see. But either way, Tesla is bullish. The market is going to recover, but there could be a little bit more downside coming. There could be one more dump coming to the markets. Okay. So this also aligns with some key levels. If we so just look at this carefully. This is what Tesla looks like right now with an inverse head and shoulders. This is just based off of pattern analysis. And then when you look at this, I also love to just draw out these key fib levels. So it's always fun to just kind of experiment with these. What you'll find is if we take this, you'll notice that this aligns very nicely right over here. Our 0.786 retracement would take us all the way down towards like the 170 area, 168. That's kind of a stretch. I'm not sure if Tesla will go that low, but I believe what this is telling us is buying anywhere between 190 and 170. The entire range would be a very, very good buy point. Anywhere between 190 and 170, that entire range, closer to 180, that is a very good area to buy Tesla. Not financial advice, because it's going to rally back to the 300s within a couple of months, guys. I'm very confident about that as we're forming a bullish structure. So we have an inverse head and shoulders. There's a risk that we could dip lower temporarily. Okay. The first move is going to be upside for a temporary move. Then the medium term is going to be more bearish, but the longer term towards the end of the year is more bullish. Hopefully that's very, very clear. So just to clarify what Tesla could do, I'm gonna make this very simple to understand. I'm gonna draw this out for you. Okay. Tesla has this um, bearish structure. There's a downtrend right now on Tesla for now. Okay, so technically we've been downtrending, so on and so forth. But listen to this. Here's what Tesla's going to likely do. We're going to see a temporary push. The market is trying to uptrend right now, trying to push a little bit temporarily. Maybe Tesla goes up to 208, approaching our 200 EMA. Maybe it goes higher, and then there's going to either be a lower high to be made for one final bottom, and then we're going to be looking for a nice recovery from here, or Tesla's about to be forming a new low, and we drop all the way down towards 168 or so before we get that nice bounce. And then if we're ready to get that rebound, whether Tesla makes another higher low, that's when we're going to be looking for like an inverse head and shoulders to form and this recovery phase to begin towards the end of the year, where Tesla starts to really push into the 300s, or at least the high 200s approaching 300 as we approach the end of the year past the robotaxi event. So that's the move. And notice how, once again, this is resembling this inverse head and shoulders. You have this left shoulder here, the head and the right shoulder. It aligns very, very nicely. And I think that that's what Tesla is going to most likely do for the next upcoming months. Okay, so there's a lot of buying opportunities coming for the markets. I'm excited. I'm not scared whatsoever. When everyone is panicking about a big crash, I'm buying, and I'm just reminded of the phrase to be greedy when everyone is fearful. So that is giving us a big opportunity. I just want to give you guys a quick analysis of Tesla. For the short term, as long as there's no major attacks, at the time I'm recording this, I'm not really seeing the news about it. But as long as there's no major attacks, the market's going to continue to push higher. Temporarily, we could be seeing a bigger drop after that. Just like what I'm showing you guys right here, right? A temporary push, then some downside, this temporary push right here, then the downside move. And then we're going to be starting our recovery phase once the market bottoms, which is going to be coming soon, most likely. So we'll see how things go. This is just some things that I'm seeing as potential possibilities for the markets. Do not solely trade based off of this. This is not financial advice. It's just me giving you guys some insights about what could end up happening. And I'm going to continue to do an analysis on a day-to-day basis for more insights. All right. So have a great weekend, guys. I'll see you guys tomorrow on the next one. Thank you for listening, and peace out.